E-mini S&P stumbled a bit at the beginning of the week, but boy, what a ride and what a push higher we saw, continuing to see that bullish momentum that has driven this stock market to new highs week after week after week. This week was no different. New weekly high settle. And amidst the fact that we traded in a 100 handle range in the minis. So we saw a big move lower, then we saw a big retracement quickly higher, and boom, now we're trading, well, a little bit off the highs, but still in new weekly high settlement territory. So the momentum we saw, which maybe looked to get a hiccup or a pause or maybe a sideways trade, briefly existed, and then it just turned around and went bullish again. So it holds its bullish formation despite the down trade this week, but came back very strong, even stronger amidst a mixed jobs number, possibly kind of missing the expectations, but still showing some positive growth. The average hourly earnings numbers were a little low, but essentially it looked like the market was going to trade sideways today, and lo and behold, we got a nice little bid. We certainly didn't give back any of the gains that we recaptured after those lows were put in. So the stock market continues to hold very bullish levels. Could we hit 3,300? Well, yeah, we could. We almost did, and things sort of backed off a bit. But next week we have some data. Things look positive, and I think that we'll continue to see this push higher, and 3,300 is right around the corner. Recall, it wasn't too long ago that we were trading 3,200, trying to figure out when we're going to reach 3,300. Didn't know it would come this week. So the momentum continues. Nothing changes there. The volatility index did see a spike on that push lower. Recall, we were down about 50 handles during that first Iran skirmish night, and things really looked ugly. The VIX index spiked. We got we got to trade towards 20. We didn't quite get there. There was a huge buyer of Feb 25 calls, somewhere in the ballpark of 50 or 60,000. Looked like this was going to be the beginning of a new era in volatility in the equity markets, and lo and behold, moments later it was gone. The VIX index head down with a 12 handle again. So not seeing any fear in the market, especially as we continue to push to new highs. Not saying the market's complacent. I think that's a word that gets overused in this case. I just think that there's no fear and no reason to be buying defense to the downside, because you haven't needed it for so long. So at this point, higher equity indices levels, lower volatility marks. We had that one hiccup, but that is now a distant memory. Looking ahead, what's going to drive the markets next week? Well, obviously we'll continue to watch Iran. We'll continue to watch China. That signing of phase 1 is nearing January 15th, or possibly just after, is what we heard today. So that will continue to drive the market higher. If it doesn't come, that could be something that brings on a bearish sort of push lower. But pushes lower in the equity markets, whether considered bearish or technical, have really just been buying opportunities all along. And whether you have to be patient and wait, or you buy and then just wait for it to come back to your level if things continue south, I think at this point equity buyers are going to be a little bit more patient given what they saw on the Iran news this week. Likewise, we get a lot of data, CPI data, inflation data, retail sales. There's a lot going on here, but ultimately on the horizon, we're going to be watching for that Jan FOMC meeting. Not that anything's going to change and the Fed's not going to all of a sudden turn around and be raising rates. I think a steady Fed is bullish for equities, as is a dovish Fed. But right now they're just going to hold things steady. And today's jobs number did not change any of that. And a Fed that is on hold, which will continue to do what it has to do in the short end of the market to keep things untangled, so to speak. The equity markets will continue to do their thing. The only place to be, or the place where everyone wants to be, is still stocks, with yields still relatively low on a historical basis, and I think they're not going anywhere either. Equities are the play. So at this point, I don't see any reason why 3,300 couldn't be reached next week, amidst some economic data, whether it's positive or just sideways. And then we look ahead to FOMC, where I think that the Fed's going to stay on hold. They're going to tell us that, and equities, it's only going to push equities higher. So right now, 3,300 could be here as soon as next week. Then we're going to start talking about 3,400 E-mini S&Ps, but that's a story for another day.